Amendment be agreed to. I call the Treasurer.
Thank you, Mr Deputy Speaker. Firstly, I want to thank all those members who have contributed to this debate, and I want to thank the opposition for their support for the bill. The government won't be supporting the amendment to the second reading, and I'll come to those matters shortly. Multinationals need to pay their fair share of tax in Australia. We all agree with that. That's an important principle. It's one that is being pursued now through multilateral fora for some years, and Australia has been in the vanguard of that approach. It has led that approach, and the former Treasurer who introduced this bill to the House was the principal driver of that agenda for the government, and I acknowledge his contribution in bringing this bill before the House, because it brought to a head the matters that he had been championing through the G20 and other fora. This bill implements the government's 2015-16 budget measures to combat multinational tax avoidance. These measures will force multinational companies with significant activities in Australia to pay their fair share of tax. This is what it does. This is what this bill is, and that's why it's a bill worthy of support. This will level the playing field for taxpayers and ensure that families and small businesses are no longer unfairly carrying a greater tax burden because of those large companies, multinational companies, not carrying theirs. The new broader multinational anti-avoidance law will target, at this stage, 80 large multinationals that the ATO has identified as having significant activities in Australia but are potentially using contrived structures to book billions of dollars of Australian sales overseas and to avoid Australian tax. Now, before this bill was introduced, there was only 30 such companies that were actually working with the ATO. And now that these measures are being put in place, this has more than doubled the net that the Tax Office has been able to put out in terms of ensuring multinational organisations will be paying their fair share of tax. So it has already had a significant impact, and it's even yet to pass this place, Mr Deputy Speaker. The Commissioner of Taxation will be able to force them to pay tax on profits from economic activities undertaken here in Australia. Multinationals will no longer be able to justify contrived schemes to avoid paying tax. This rule will strengthen our anti-avoidance rules for multinationals by catching arrangements that are designed to obtain both Australian and foreign tax benefits, to stop companies claiming they are only seeking to avoid foreign tax, and lowering the purpose test from sole or dominant purpose to one of the principal purposes, making it easier to apply. This means that they will now pay tax on profits from their Australian activities. That is the objective, and that is what this bill is designed to address and will address. Penalties for large companies that enter into tax avoidance or profit-shifting schemes will be doubled from 1 July 2015. These are measures with teeth, Mr Deputy Speaker. And country-by-country reporting, a key recommendation of the BEPS process that has been worked through by the OECD, will be required where large multinationals will need to report additional information to the ATO about what tax they're paying and where. And this is significant. This is a significant improvement in transparency and will help the ATO undertake targeted assessments of transfer pricing risk. Now, while we have not put a figure in the budget, Mr Speaker, and I note that that is one of the issues raised in the opposition second reading amendment, I've been advised by the Commissioner of Taxation that the amount of revenue to be raised is in the hundreds of millions of dollars. Now, contrary to the unfounded accusations of those opposite, this approach is actually consistent with responsible budget practice in respect of measures that are not readily quantifiable. And I note, Mr Deputy Speaker, that the opposition took this approach when they amended Part 4A of the Income Tax Assessment Act 1936 in the 2012-13 budget, when they amended the transfer pricing rules in 2013, and when they introduced the Petroleum Resource Rent Tax in 1987. In each instance, those opposite, when they were in government, put no revenue in the budget. Now, that's a standard practice for these types of measures, and the government is following the same practice. But those in opposition are seeking to score, I think, quite cheap political points about this, when at the end of the day the government is following exactly the same practice that those opposite followed when they were in government. But another thing they did, though, when they were in government, Mr Deputy Speaker, is when they first published the mining tax measure in the 2010-11 budget, they put a revenue figure in. They were very proud about the revenue figure. They budgeted for $12 billion of revenue over the first 2 years of its operation. $12 billion was going to come from the mining tax measure outlined in the 10-11 budget. But they just didn't put the revenue in. They booked the spending off the back of the revenue as well, Mr Deputy Speaker. They irresponsibly locked in billions of dollars of spending against revenue that vanished before their eyes. This government doesn't operate like that, Mr Deputy Speaker. This government actually carefully considers these measures. We don't get ahead of ourselves and look for the grand big press conference where they stand there and thump the table and say this will raise X billion dollars. They tried that and they got themselves into awful trouble, and this government has had to unpick these things since we've come to office. So, Mr Speaker, the actual revenue wasn't $12 billion from the mining tax. Before the measure was repealed, it had raised a mere $200 million, creating a significant budget shortfall. We're not going to repeat the folly of those opposite when it comes to these very important measures. The government is taking a strong and balanced approach to dealing with multinational tax avoidance. These measures are not about plugging a budget hole, but are about achieving meaningful behavioural change around corporate tax avoidance. And I want to commend the Commissioner of Taxation on the positive approach he is taking with these multinational companies domiciled in Australia. They're engaging, they're working the issues through. With the advancement of the broader multilateral approach to this issue, multinationals are recognising that it's time to bring it to account. It's time that they will have to pay tax where they earn the revenue. And they are working with tax authorities, but particularly are working here with our tax authorities to ensure that these matters are resolved. Now, the opposition has proposed a number of measures which they claim will deal with multinational tax avoidance, and that is principally by limiting interest deductions by applying worldwide gearing ratios to all multinationals. Now, Mr Deputy Speaker, this is a very blunt instrument for the opposition to apply, and I would encourage them to think through the implications of what they're putting forward. Unlike the government's actions, these proposed changes to the thin cap rules will deter investment and cost Australian jobs. That's not just the view of the government. That's the advice I've received, Mr Deputy Speaker, that it will actually deter investment and cost Australian jobs. Investors who are principally equity funded would be particularly affected. Investors such as large pension and infrastructure funds who invest in critical sectors such as infrastructure and are typically debt-funded at the project level would be unfairly impacted and disincentivised from investing into Australia because of the very blunt approach that the opposition is proposing, as opposed to the bespoke approach which the government is actually following, where you look at the actual project, the actual investment and the actual nature of the business activities being pursued by that company, and then you tailor the tax treatment to reflect what they're actually doing. The opposition doesn't do that. They just want to apply a blanket, broad-based rule which takes no account of the sensitivities and natures of the investment and will, frankly, scare pension funds and others off from investing in Australian infrastructure and scare off the jobs that come with them. Now, I don't know why they're so wedded to this particular proposal when the measures that the government is already following deal with exactly the same issues that they're raising around thin cap rules around the world. We are leading the world on these issues, and why they would seek to point out a point of difference in this, the only point of difference is what the opposition is proposing to do will actually deter projects and investments and jobs. Now, this would clearly adversely impact legitimate activities of many Australian headquartered multinational companies in Australia, and could actually drive them offshore from where they're currently located here in Australia. The policies also on multinational tax avoidance do not really go to the heart of the issue either, Mr Deputy Speaker. The policy primarily targets debt deductions while ignoring the fact that the government has already taken action to significantly tighten Australia's defences in this area, as I just mentioned. As such, the opposition's policy does not focus on areas where there is the greatest potential to address profit shifting by multinational companies. And our encouragement is stay focused on the ball. You've got to follow the ball, not the man. And when you're playing the man, which is what the opposition is trying to do, they played the man very much here in this very chamber with the opposition the other day, raising questions about this issue and drawing it to links to Cayman Islands and the Prime Minister. They're playing the man, not the ball. The ball is ensuring that we're going after the tax revenue of multinational companies, which is what our measures do. Those opposite want to play the man. They want to play the politics of envy, and they want to play the politics of xenophobia when it comes to foreign investment, Mr. Speaker. Now, Mr. Deputy Speaker, now they can do that, but it demonstrates that they are not being part of a constructive agenda. Now, I recognise that the measures in this bill they are going to support, as they should, because they're good measures and they will do the job. But I would encourage them to stop their process of playing the man rather than playing the ball when it comes to the issues of tax and broader economic policy in this country. The government's measures, as outlined in this bill, are well considered and balanced and will effectively strengthen our taxation system to ensure it is fair and it is sustainable. We are closing the digital tax loophole also to ensure the goods and services tax applies to digital products and services which are downloaded in Australia. And this government has taken action to tighten Australia's thin cap rules to limit the scope for multinationals to claim excessive debt reductions. We have asked the Board of Taxation to work with businesses to develop a voluntary code for greater disclosure by companies of their tax information, and I met with the Chair of the Board of Taxation today to discuss these very measures. As G20 President in 2014, the former Treasurer led the global response to tax avoidance by multinational companies. And under Australia's leadership, the first of the OECD G20's base erosion and profit shifting, also known as BEPS recommendations, were delivered last year. The OECD has now finalised, and last week, its report to G20 finance ministers on the outcomes and final recommendations of the BEPS action plan. The multinational anti-avoidance law, which has been debated here in the House this week, is entirely consistent with the final OECD report and recommendations, and the final recommendations provide a strong platform for further action to strengthen the integrity of our tax system and assure it is fair and sustainable. And we will continue to take the lead, Mr Deputy Speaker, in the OECD and G20 to restore fairness in the international tax system and ensure entities pay tax where they have earned their profits, and I commend the bill to the House.
I thank the Treasurer.